Any apologies? No apologies. Draft minutes, pages 5 to 9. Members content their record.
Agreed.
Refer members to the table of requests from pages 11 to 14. Members, just draw your attention, a lot of requests from the committee. There's a lot of late or outstanding responses from the department, so perhaps we should send a letter to ask what the hold up is in regard to those. Moving on then, the final draft executive budget 15-16. The copy of the ministerial statement on the final budget is at pages 4 to 14 of your table papers. And can I welcome Joanne McBurney and Jeff McGuinness back to the committee. Morning.
Morning.
If we could just clear something up first of all, in terms of the budget date, is that next week?
It's Tuesday.
It's Tuesday coming. We were under the impression it was to be in February, but it's been brought forward, or?
Wasn't aware of the February date. Tuesday was the first.
Did it?
The ones in February are more to do with the supplementaries and the vote on account stuff and that, rather than the actual approval of the budget.
Yes, the actual budget.
Okay.
I asked the same question yesterday, that's the only reason I know.
Okay, do you want to make some brief opening comments, then we'll go to questions?
Yep, well indeed. Thank you very much for this chance to update you on the final budget. You'll be aware that the main changes to the overall position since the Executive's draft budget in November are the Stormont House Agreement and the outworking of the Chancellor's Autumn Statement. The Autumn Statement provided additional funding of 67 million resource DEL, 5.7 million capital DEL and 1.3 million financial transactions capital. The Stormont House Agreement confirmed the resource capital flexibility sought at draft budget. Excuse me. It also increased this to allow a further 100 million of RRI borrowing to be used to fund a voluntary exit scheme, bringing the total available for that scheme to 200 million in 15-16. It then provided an additional 100 million of borrowing for capital projects to help offset this additional switch and allowed the flexibility to repay the 114 million welfare reform penalty from capital. The agreement also provided 30 million for bodies dealing with the past and 50 million for shared integrated education projects. These changes have all been incorporated into the budget position. The final budget makes further allocations of non-ring-fenced resource DEL amounting to 151.6 million. This includes 64.6 million to education, 33.2 million to the Department of Employment and Learning and 20.8 million to the Department of Justice. 151.6 million includes 30 million of change fund bids. On capital DEL, apart from some reduced requirements, there have been no substantial changes to departmental allocations. The Northern Ireland Investment Fund is to receive a further 28.8 million in anticipation of it becoming operational in 15-16. However, that does not preclude departments identifying further proposals for the use of FTC funding. As a result of these changes, the Executive leaves the final budget with an overcommitment of 58.4 million on resource DEL and with a very small 2.3 million capital DEL overcommitment. Given that the current welfare reform timetable will lead to a proportion of the 114 million being returned to the Executive, it's considered that this level of overcommitment is manageable. I'm happy to take any questions you may have.
Can I just ask, in terms of the change fund, I think Simon said in the statement there was numerous applications to that. Could we get details of just what all the applications were, as well as those that were successful?
I don't have details of every single application. There were, sorry, Jeff, do you know the actual number? There were a substantial number.
I don't know the exact number, but we will be able to get you a summary of applications. Yes.
We can do that. We can talk through some more detail on the ones that were successful. There were 19 successful bids. STARD got 1 million for the integration of control information for EU area based, so that's sort of their area based plans for maps for farmers, and to help that'll help avoid EU fines. DE got 1.6 million for nurture units. DEL got 13.2 million for a variety of projects: essential skills, maths and English for 14 to 16-year-olds, condition management programme, United Youth Programme pilot phase, apprenticeships and youth training, and then they had a joint bid with DETI for collaborative skills, of which DEL received 2 million and DETI received 7.1 million. DETI also received 0.3 million for health innovation and life sciences. DFP received 1.6 million for collaborative procurement and public sector innovation lab. Health received 4 million for Belfast Trust Sites Patients Modernisation, Rapid Assessment Interface Discharge, Northern Ireland Strategic Innovation in Medicines, Project ECHO and All Island Congenital Cardiac Service Model. DOJ received 2 bids, 0.3 million for prison service underachieving boys, supporting young offenders to change their lives through education, and for the Probation Board Intensive Resettlement and Rehabilitation Project. And DSD received 0.4 million for 2 projects, Want to Work or Why Work project and a pilot project to deliver services to older people in their home.
You see, just in terms of the initial tranche of applications coming through, I mean, obviously departments will chance their arm and try and make anything fit
Yes.
under the change fund. You know, so how wide is it for applications, or have you been very specific?
We set the criteria. The department has to apply and satisfy certain criteria, which I'm just sort of.
And did you find, in terms of some of the applications that were turned down, that departments were chancing their arm?
Yes.
Some of them, yes, definitely. We set aside, we had essential criteria and marked those on a pass-fail basis. Any that didn't pass those criteria were put to one side, and then the others were scored on the full range of the criteria, including the desirable, and then those were the top marks got through. But yes, there were some which were pushing it a bit.
In terms of the committee report that was done before Christmas, what consideration has been given to the recommendations that were reached in it?
We obviously, at the end of the day, the final budget allocations are a matter for the executive, but we have read the committee's report and we have considered that, and we will continue to do that as we work through the process. In particular, Jeff?
Yeah, we will have taken on a number of the recommendations that the committee's report did, including a greater degree of information based on departmental outcomes in the actual final budget report. So the budget document itself will give more details at departmental level on their outcomes, the options that they're using to live within their budgets, and different allocations like the change fund. So all those that sort of information is more detailed now within the final budget.
And in terms of the welfare reform figure, 114 million, is that being held by DFP at the centre or being paid to Treasury at the beginning of the year?
It's being returned to Treasury at the beginning of the year. That was part of the Stormont House agreement. Treasury will deduct that from our budget at the start of the year. However, it is agreed that once welfare reform is implemented, a proportion of that will be repaid to the executive in the year.
I presume that's pro rata as to when it's...
Pro rata, depending on implementation dates. We're working on the basis it will be about 6 months into the year.
And in terms of the figure of 26.9 million for measures to mitigate against the worst impacts of welfare reform during the second half of the financial year,
Yes.
how was that calculated? And what is
That was based on a figure provided by the Social Security Agency, so I don't actually have the underpinning detail for that, but they have, as you say, and it's
Are
only
you sure
for the
that's
second
a
half of
correct
the year.
figure from the Social Security Agency? Or?
Sorry.
It's the latest figure.
Okay, any questions, Leslie?
Yeah. 2 or 3 quickly, Chairman. In the asset realisation, in the budget papers is showing 50 million, I think. In response to a question, the Minister stated the figure was 158. What's the difference?
There were already 109 million of capital receipts built into the draft budget position on top of the 50 million asset realisation. Then there were additional receipts identified by departments between the draft and revised budget.
And how are the receipts then treated as capital?
It depends on the nature of the receipt. If they're from asset sales, they will be capital receipts, or if they're from loan
Were
repayments.
they from asset sales?
From asset sales and loan repayments. They're all capital.
Loan repayments also included in that?
Yes, loan repayments are treated as capital. Principal repayments.
And what was the figure for loan repayments?
I don't have it off the top of my head, but it was quite high in the draft budget. It's basically NIHE loan repayments, Housing Association loan repayments.
From the social development then?
Yes. They historically do have a large level of capital receipts from that source.
Where can I find that in the budget papers then?
It won't be detailed in the budget paper, that, but I can get you a specific breakdown if you wish to have it. I can get you a breakdown.
I would like
capital
just to
receipts.
know, because I hate these things coming out of the air, you know, and from my rather sort of straightened logical view of things, I can't see how they could be treated as asset realisation if it's repayment of a loan.
They're not asset realisation, they are capital receipts. They're not asset realisation, they're capital receipts. There are different variations on capital receipts.
Why would the Minister mix those two up then?
I'd have to look at what his statement said, but I'm sure he said capital receipts, but I'd have to look back on that.
Okay.
But they are all capital receipts.
The other thing of interest to me particularly is the capital to resource switch.
Yes.
Now, we have, is it, again, I asked the Minister this and he sort of danced around it a little bit, but how, has this now been agreed as a precedent?
No, it has been agreed for the period set out in the Stormont House Agreement. It's not a precedent. If we needed anything over, if we wanted anything over and above what has been agreed in the Stormont House Agreement, we would still have to seek that from Treasury. It's been agreed for very specific purposes for a very specific time.
So is it only that one amount?
It's only the amounts detailed in the Stormont House Agreement. So for the use of the RRI borrowing for the voluntary exit scheme, it is over a period of years. It's 700 million over.
Yes. Is it 15 years, I think, or something like that, isn't it?
No, it's sort of 4 years.
4 years.
4 years.
Okay. And the same sort of logic with respect to the Northern Ireland Investment Fund. We're hoping to put the financial transactions capital in there. Has that been agreed?
Well, obviously, with the Northern Ireland Investment Fund is still at the feasibility study stage, and there'll be outworkings from that. But yes, Treasury have agreed in principle. So obviously, they will also be interested in the outworkings of the feasibility
Well,
study.
there shouldn't be any difficulty with
There
that
should not
because
be any difficulty.
we're talking about some 40.9 million next year, isn't it?
Yes. And we engage with Treasury on all the FTC proposals as they're coming up, so there's no surprises.
Good. The last one, Chair. Any figures held in the centre at this point in time?
There are figures held in the centre at this point in time. They are actually detailed in the back of the Dutch budget document in Annex A.
Page
They
151.
haven't moved from then. No changes since that.
Oh, no changes since this is the position and will remain so until.
You have to watch them very carefully. Okay,
That's
thank you.
Deputy Chair.
Thanks, Chair. Morning. I was just looking at the cuts to the Assembly budget here. There's a 5% cut. And since the Assembly is the body which has primacy here in the institutions, and the Minister is answerable to the Assembly, and the Assembly is responsible for scrutinising the Minister's actions, is the Minister within his authority to cut the Assembly budget?
Well, it wasn't the Minister's decision alone, it was the Executive's decision, and I think the Executive.
Well, the Executive is also responsible to the Assembly.
Yes, and I would say that they considered that before they took the decision to reduce the Assembly's budget.
And the same applies to the Audit Office. I mean, the Audit Office is another form of scrutiny that we have in public spending, and yet we find that, you know, it has been cut by 5% as well. So, you know, one would not be mistaken, perhaps, if one said that the budget had the appearance of reducing the scrutiny, the levels of scrutiny on public spending.
No, I don't think the intention is to reduce in any way the level of scrutiny, but that those bodies have to be as efficient as other departments are being expected to be, and it is only fair that they should really lead the way in efficiencies. And so far, their budgets are reduced by less than other departments are facing.
Surely, you know, especially in respect of the Audit Office, the work of the Audit Office has been proven to save the public purse many millions. So by reducing the budget of the Audit Office, you're therefore reducing its ability to produce those savings. So it could well end up in a false economy.
Obviously, that's something that would have to be considered, but I think the view would be that the Audit Office should be able to continue its role in simply in a more efficient manner. There's no body out there that is operating that's most efficient at the minute, I would imagine.
Agreed.
Okay, I have my doubts about those two particular reductions and the effects they will have, but so no doubt we'll have a chance to raise those issues directly with the Minister. Thanks, Chair.
Joanne, just in terms of the funding bodies to deal with the past, to see £30 has been allocated for those. Obviously, we're going on to new ground here to some respect. What assurance do we have that that is actually going to be enough, or how have those figures been reached?
I'm not party to how those figures have been reached as part of the Stormont House Agreement. There is still a body of work to be done in developing the policies and determining which bodies the funding will go to, and that will be ongoing between OSM, DFM and ourselves, and has to have agreement of the UK Government. But at this moment in time, I can't say whether the funding set aside is enough or not. I don't know. I don't think it's been well enough formatted, but I'm sure that was taken into account in the development of the Stormont House
There's
agreement.
still a level
that
of
was agreed.
assurance to.
From my perspective, yes, but I wasn't party to the agreement that reached that, so I'm sure there's been more thought put into it than I'm aware of.
And in terms of the pensions cost as well, I mean, obviously it came to the committee as a bit of a bolt out of the blue in recent months in terms of the 133.2 million provision. Now that's been reduced by 10.7 million. How confident can we now be that this is now an accurate figure, or is it still subject to some variance?
No, that is the agreed figure with Treasury and the Government Actuaries Department and our own pensions branch, so that is the figure for the revaluation at this point in time.
So that won't move?
That won't
at all
move
now?
this time. It now needs to be handed, or if it does, it will be very marginal. They now need to develop what the impact is in individual departments, and we'll allocate that money out to them.
Any other members? Any questions? No. Can I ask just in terms of the performance of the Department of Health? I mean, obviously the Minister has made some comments about how budgets have been managed in the previous financial year, and DFP now plans to assess the performance during the year monitoring activity. How will the outcome of that work be reported to the committee and elsewhere?
I'm afraid I'm not aware of how that's going to be reported as yet. It'll be determined as we work through the process. The supply officers will keep in close contact with the department and no doubt will report back to the committee if you wishes to do so on how that's...
I would imagine that the outworking of that will come through in each monitoring round, and the executive will be updated, I would imagine, as that part of that process, and then the committee, through its scrutiny of the monitoring rounds, will receive some sort of update at that point.
Is it going to be any tighter scrutiny than what's went in the past in terms of the Department of Health, or
I think there's more focus.
is it going to be a step change?
Definitely more focus on the additional allocation of 200 million to make sure that that is directed absolutely at frontline health and social care.
What is frontline health and social care?
I mean, that's sort of part of the process, is to make sure that we have a very strict, or a very good definition of how that goes to, I mean, through trusts and not sort of washed into admin and trusts, but directly out to patient services.
And in terms of the timetable for the longer term measure involving a case study as part of the ongoing OECD review, do we have any details of that timetable?
Not at this stage. It's not particularly our area. However, we would expect that as that work progresses, that if we have any particular updates from that work, that we'll incorporate them as recommended by the committee.
Archie?
Thank you, Chair. Apologies for being late. I was with Mr. Nolan. That suffices as an excuse for not in here. No. I don't know if the Social Innovation Fund came up earlier. Could you tell us a little bit more about the Social Innovation Fund and when we can expect to find details of it? And the Minister talks about using 5 million of funding. He talks about being loans to charities, faith-based organisations, social enterprises for the third sector.
Yeah, we don't have an actual time scale for that yet, or at least not that I'm aware of, because it's not our area. However, it will use the dormant accounts money and will be developed, and more details will be forthcoming on that as we go through, and it is hoped that it will lever in additional funding.
Yeah, I think there's previous proposals out there, and subject to a consultation exercise, the Minister has decided that that spending priority should be social investment in general from the dormant account scheme, so that work will be progressing.
In terms of the voluntary exit scheme then, what role will DFP have in coordinating that, and when will that work begin? I mean, obviously there's been a lot of public interest in it in the past couple of days, so can you maybe elaborate in terms of the process going into this first financial year of it?
But it won't be something that our area of DFP will be coordinating. It will be the Public Sector Reform Division in conjunction with Corporate HR for the NICS scheme. So a paper is to be brought to the executive on that shortly, which will set out timescales and the different measures that will be looked at.
Would you know indication at this moment?
I don't have any
what shape that will
indication
take?
of time, but I would imagine the plans will be at least to have some exits in 15-16, given the funding set aside for them, but I don't have.
But has there been any discussion in terms, I mean, when you're having a voluntary exit scheme, how do you protect frontline services in terms of some of the skill sets that staff have? Has there been a debate within the department about how you
red ring them?
you do that.
Yeah, I mean, I think that is a key issue, and it's something that will have to be considered when they're developing the schemes. But as I say, it's not our area of work, so I'm not.
John?
It's just on the chair's point. I mean, the wider thing is, you know, you need to see timescales and what happens if executive or public sector reform divisions start to miss those. Timescales could have a major impact on budget, because
Yes.
one time you'll either not be borrowing, but you also won't accrue the expected savings. And I have to say, taking 20,000 public sector workers out in a 4-year period is pretty ambitious, I would have thought, on a voluntary capacity. I mean, I don't know why.
You're completely right about the timescales and the concerns over the budget. Obviously, once the executive have seen the paper and agreed those timescales, then they will become, you know, you will be aware of them, and we will be monitoring them closely as well, because you're right, it will have a big impact on our management of the budget.
Thanks, Chair.
Liza?
Yeah, just go back to DSD. Another point I found a little bit confusing. There is a switch from resource to capital Dale, 2.7 million, right? It says here as a consequence of expenditure been incorrectly classified. Can you clarify that any more?
Sometimes, and Jeff may have more details than I have, sometimes the treatment of certain categories of expenditure changes due to either treasury changes and rules are changing in the accounting treatment, and that means that the budget category has to change. The way the budget is constructed, the baseline position rolls forward. Now, that amount was also reclassified in year in 14-15. That was when the change in classification occurred. But because we roll forward the opening position as opposed to the position after a monitoring round, it was rolled forward into resource Dale, whereas it had actually been changed in classification to capital. So it's really just affecting for forward years what had happened in the in-year.
But if you look at the schedule coming out of June monitoring from Table A, there's actually 0.1 funeral payments reclassification, capital 0.1 million. So it was in capital there.
I would have to look at the monitoring detail.
There's a small part of it relates to 2.7. There's a small part of it relates to funeral payments. There's a larger part that relates. Yeah, there's
two transactions in the monitoring round.
I'm not aware specifically of the larger element.
Yeah, 2 transactions in the monitoring round, I think, given a net position.
Still a bit confusing how we're reclassifying from Dale to capital, and it's actually the reduced requirement was capital in January monitoring.
I would have to look at the detail of the monitoring. I think there was two transactions in the monitoring which gave a net position, whereas in the budget there's only been 1 transaction. And
what that suggests to me is it was in capital and in resource to some extent.
No, I think in the monitoring rounds, and I'm going to look at Stephen here, in the monitoring rounds there were 2 transactions gave rise to the position.
What does that mean exactly? Doesn't seem logical to me either, Chair. It's quite clearly here a funeral repayment reclassification.
Stephen, you just want to come to the table? Just
Yes, might be easier. Anyway.
That have been the voice from the past down there.
Sorry. Yes, it was a reclassification of funeral payments from resource to capital, and you'll see that in the reclassifications table as part of the January monitoring round.
That's a 2.7, yes.
That's right. However, linked to that, there was a 0.1 million capital receipt relating to repayment of those funeral payments coming back into the Department of Social Development, and because it was now capital rather than resource.
But it would have been paid out of resource, wouldn't it?
It would have been initially paid out of resource, but the payment was then switched to capital as part of the reclassification. So the payment was scored in capital. The receipt coming back into the department was scored in capital. However, the department deemed that they couldn't utilise the 0.1 million capital receipt and returned it to the centre as a reduced requirement.
Is that part of the 2.7?
It's not part of the reclassification. It's linked to it's the same area, but it's not the reclassification.
It's quite a simple question. Is the 0.1 part of the 2.7?
No.
No.
2.7 is the payment out, whereas
so
the 0.1 million's coming back in, a repayment.
It's outside of that transaction.
Right.
Okay, thanks, Chair.
Just to go back to the financial transactions capital, there's a reference to the 27.5 million reduced requirement from Derry in respect to that. What was that for?
It was the draft budget set aside indicative allocations for financial transactions projects in individual departments. Departments were then asked to look at those between the draft and revise, and Daddy have revised some of their assumptions. I don't think I have. Jeff, do you have a breakdown? I don't have a breakdown with me of which actual projects it was they said they wouldn't spend the full amount on, but it's Daddy's assessment of what they need for the projects we give them financial transactions, and they're surrendering at this point because that allows longer time for us to determine where they reallocate that funding.
It's a significant amount of money to be returning at this stage.
It is, though they did have a significant financial transactions allocation in the draft budget.
You've no detail on what that is then?
I don't have the detail with me, but I can get you the detail.
Yeah, no problem. And then also in terms of the 40.9 million that's been diverted to the investment fund, does that need to be fully spent in the next financial year?
We will have, I don't think the carry forward arrangements for FTC have been agreed with Treasury in 16 into 16-17. We'd envisage it being fully spent, and that would be our preference. We will probably have some element that we can carry forward if we need to.
The carry forward arrangements will be the same as capital at that stage, so it'll be up to 1.5%. So we're looking at trying to utilise the full FTC allocation of 15-16 to minimise that kind of risk of having FTC that we have to give back to Treasury.
So what assurances do you have that will be spent and you won't have a significant amount of money coming back again?
Well, obviously, if the Northern Ireland Investment Fund proceeds as expected, that money will be allocated to the fund, and that will count as that being spent. We will monitor that closely. If there should be any slippage or any risk of that, we will look for other projects to allocate it to.
We are still, I mean, and the Minister was very clear that departments, if they have options for utilising FTC, we will divert funds from the Northern Ireland Investment Fund into viable projects should they arise.
Okay, members?
Sure, just to follow on that last bit. There's been a weak area here, this whole question of applying and utilising financial transactions capital. Now, this year we had an emergency bailout really by the university again, using up some, but we allocated, we still haven't got a system, unless you can tell me otherwise, where we actually have a system, for example, where departments work with the private sector, that there is actually a going platform of some sort there. We don't have that, as I understand. So are we not simply, I hope we're not, shuffling money around here? The idea, we'll put it in the investment fund, part of the capital pool, you know, and it won't be treated any differently. There's no guarantees that it's going to be utilised. Are there any projects at the moment being worked up?
There are a number of projects under consideration. Obviously, we are reliant to a certain degree on departments working up those projects with their private sector partners, and also, as our Minister said in a statement, on the private sector coming forward with suggestions and ideas for how that can be used. And the Strategic Investment Board do go out and meet with the private sector to encourage them to make use of this. In terms of the Northern Ireland Investment Fund, obviously the feasibility study has to be completed. Once that is done, and if the fund is up and running as we imagine it, then the funding put aside to that will be utilised. So, you know, the investment fund will give us a mechanism for doing that. In the meantime, we still are working up, there are a number of proposals being considered by departments at the moment, and we're working with them on that.
All those projects that the Minister referred to as requiring further refinement, have they now been sorted out?
It's an ongoing, some are at further stages, but there is ongoing work. Some are at further stages, and some of them will be more definite than others. But
And departments have confirmed that they have 88.1 million in total allocations out to departments. So departments in their 15-16 budgets have confirmed that they're anticipating using 88.1 million of FTC for particular projects, with the remainder then in Northern
No one wish to appear cynical, but there were projects worked up, you know, in the current year which haven't materialised, including Detty, which was surprising.
It's probably something that departments are still trying to get a handle on.
That's exactly my concern. That, you know, we haven't moved on very far.
Again, it's something that we will be working with departments and encouraging them to finalise projects as soon as possible.
Okay, Chair. Thanks.
Okay, members. Moving on to the next item then. And can I seek agreement that the committee seeks an update briefing from the department in respect of dormant accounts, given the Minister's reference to 5 million from this source being used to finance the Social Innovation Fund. Agreed? Okay, thank you, Jeff. Down your monitoring round, ministerial statement, pages 15 to 31 of your tabled papers. And can I welcome Stephen Barrett to the table? Do you want to make any comments first of all before we go to
Yes, I'll make some brief comments if that's okay. Again, thank you for the opportunity to update you on the 14-15 January monitoring round. As you'll already realise, Stephen is more over the detail of it than I am. I'll talk you through the overall position. The Executive exited the October monitoring round with a 24.7 million resource DEL and a 12.8 million capital DEL overcommitment. As detailed in the Minister's statement, there were a number of centre items that impacted on the level of resources available to the Executive in this round. These came to 20.3 million resource DEL and 3.6 million capital DEL. In addition, departments declared reduced requirements of 30.5 million resource DEL and 40.4 million capital DEL, of which 34.7 million was available for reallocation. Taking account of the central items, reduced requirements and a small number of reclassifications left the Executive with 28.1 million resource DEL and 23.2 million capital DEL available for allocation. The Executive has agreed January month allocations amounting to 14.2 million resource DEL and 27.2 million capital DEL. Full details are set out in the tables accompanying the Minister's statement. In addition, the Executive has agreed allocations of ring-fenced financial transactions capital amounting to 40.6 million, including 38.5 million for the University of Ulster Greater Belfast Development Programme and 2.1 million for Deddy's Growth Loan Fund. As a result, all of the ring-fenced financial transactions capital available to the Executive in 14-15 has now been allocated. The Minister also detailed resource DEL allocations of 5.2 million under the Developing Social Change Programme. The Executive has agreed that 13.9 million of resource DEL will remain unallocated. The Executive hope that this funding can be carried forward under the Budget Exchange Scheme. However, this will be dependent upon 14-15 outturn position reported by departments, and in particular the Department for Regional Development, who have indicated that they may incur an overspend this year. On capital DEL, the Executive has agreed to exit the January month round with an overcommitment of 4 million. Based on historic patterns of spend, the Executive believe this level of overcommitment is manageable over the remainder of the year. Following the January monitoring round, 15.8 million of resource expenditure ring-fenced for depreciation and impairments remains unallocated. The EFP will closely monitor the financial position of departments over the remainder of the year to ensure that funding carried forward on the Budget Exchange Scheme is maximised and that no funding is lost to Northern Ireland. I'm happy to take any questions.
Just as an initial comment, I mean, the January monitoring round for 30 million resource and 40 million capital is quite a significant amount at this stage to be returned. I'm sure the Finance Minister is perhaps thankful to some degree too, but in terms of management within departments?
Yeah, I mean, yes, thankful because we did start the round with an overcommitment, but to some degree surprising given the pressures departments were indicating. So, yeah, I think it is something which surprised us.
And the bids, obviously 62.4 million resource and 48.3 capital, were received. How many of these were classified as inescapable bids as opposed to anything else?
We don't have actual figures for what we classified as inescapable. Of course, you'd be aware that although we prioritise the bids, it's up to the Executive what allocations they made.
Surely you would classify them as inescapable or otherwise before it got that?
Yes, we do so, though I think the allocations do reflect those bids that are, I'm looking towards Stephen, that have been classified as inescapable.
As John says, obviously internally we undertake a prioritisation of the bids, but ultimately the Executive make the decisions around which bids they want to meet.
So in terms of those allocations that have been made, are they all inescapables?
No, I don't think that it will be deemed inescapables. Obviously, following movements at the centre and reduced requirements coming in, there was some funding available for the Executive to allocate, and they don't want to be left with too much funding left at the centre. It's in their interest to allocate some out to meet priorities they have in order that what's left at the centre won't endanger us breaching the Budget Exchange Scheme going forward, which would mean funding being lost to Northern Ireland.
The Minister's indicated as well that the Executive has agreed not to allocate 13.9 million resource and was hopeful that if it remains unallocated it could be carried forward under the Budget Exchange Scheme. Any risk attached to that position, or are you confident that that will be carried over?
Well, sorry, the risk attached to it, the 13.9 million is being held in the hope that it can be carried forward under the Budget Exchange Scheme. It also mitigates the risk of departments overspending, in particular DRD. Obviously, there is a risk that if departments underspend by a greater degree than our Budget Exchange Scheme allows us to carry forward, that funding may be lost. However, given the level of the Budget Exchange Scheme, which is around 57.6 million carry forward, I think that the 13.9 million is a safe assumption. and it's certainly needed to offset the risk that departments would overspend.
Yeah, but given the performance of departments in the January monitor now, then surely you'd be somewhat concerned that it might happen again.
No, I mean, I think the fact that departments surrendered such a level of reduced requirements in January means that they have been looking at their budgets, and I would expect that to be a reasonable position, that any underspends now to be minimal. And there is, of course, the risk of overspends in particular departments, which we have to be careful of, because were we to overspend, there's not only the reputational risk that would lead of overspending when we've already had a 100 million reserve claim, but there's also the fact that that would be deducted off 15-16's budget when we're already facing considerable pressure. So I think holding the 13.9 million is a very prudent position.
Okay. Questions, members?
The big point that concerns me is the point you just made, Chair, there about year end and getting this right. I find it January monitoring a little bit pressing, because I mean a lot of that should not have been left to the last minute. An indication to me that the departments were holding on, hoping, in fact, I don't know what they're actually hoping is going to happen, but they didn't spend the money. There's 2 months of the year really left. I would hate to see money going back to the Treasury.
Yes, and I would have to agree with you there. It is worrying that departments surrendered such an extensive amount of reduced requirements after having identified how difficult things would be through the year. Presumably the actions they have taken have generated more savings, but yes, it is a matter of concern. Right. And although that's the last monitoring round of the year, we will continue to monitor closely departments' performance throughout the year, so as if it looks like there's any risk, we can take action on that. So it is something, yeah, you're right, it needs to be looked at carefully.
Okay, members, happy enough?
Yep.
Okay, Joanne, thank you very much. Steve. Okay, members, as we await witnesses, we're just going to correspondence.
Okay, sure. There are 2 pieces of correspondence, well, 3 pieces of correspondence to draw members' attention to. Pages 88 through to 88 to 95. First piece of correspondence is the DFP paper on draft savings delivery plans 15-16. It's just for noting because there will be an oral briefing in the coming weeks. Second piece of correspondence is from a quarrying company in Hilltown, County Down, and they're highlighting an issue I think that has been highlighted before to the committee in terms of public procurement and difficulties for businesses or contractors that aren't already engaged in public contracts getting access to them in terms of the pre-qualification conditions. This is at page 93 of the pack. I think in the past others, maybe the Construction Employers Federation has highlighted this concern. So there, in the next few weeks, there'll be I think there's a briefing scheduled in public procurement, Chair. But in terms of, obviously, there's an issue here in terms of committee remits, because Transport NI falls within DRD. So certainly the DRD committee would have an interest in this. But there's a general point as well. So it's just in terms of a suggested action, Chair. The committee could write to DFP in terms of the general issue. For a response on that ahead of the briefing on public procurement issues generally, and also copy the correspondence to the DRD committee to look at the specific issue in terms of Transport NI, if members are, and also write to the company to explain the committee's action.
Okay, agreed, members.
Agreed. Then there's correspondence, page 95 of the pack, in terms of the NI Water pension dispute. Chair, it's members will be aware of the DRD committee's meeting this morning on that issue. So, it seems on the face of it, it's primarily an issue for in terms of committee remits for that committee. So, it's for members more to note, I suppose, at this stage, unless there's any suggestions or concerned.
Well, I do. The Minister did mention on media that he felt that my Finance Minister should have been involved in this process. Would that not have meant a change of the rules in relation to what we've already passed about all other pension schemes?
I don't think it would do any harm even to send a letter to the Minister from the committee, just asking what his view is on this
I would ask him to clarify that,
To clarify things.
that he made on the media.
Obviously, there's aspersions being made. And
He must obviously have another idea of how finance works than I do. And I would like him to explain that, so I think it would help.
And that's all the correspondence, Chair.
Okay. Okay, members, subordinate legislation then. Can I refer you to pages 42 to 46 of your pack? The Rates Transitional Relief Order 2015. The purpose of this is to provide for the introduction of District Rate Convergence Scheme to deal with the issue of rate convergence effects resulting from the local government reorganisation. The rule allows for the introduction of a 4-year scheme which would deliver direct support to both domestic and non-domestic ratepayers who would otherwise have faced sudden and excessive increases in their rates bills because of the differences that currently exist between the rates set by the existing councils. In 2013, the Executive agreed funding of up to 30 million to fund the scheme, and the rule will be subject to negative resolution. Can I advise members that any queries or require further information? A departmental official will be on standby to come forward to address queries. Do members have any queries on this? No. Alright. No queries on this one? No. I'll put the question in that the committee has considered DFP's proposal for subordinate legislation under the Rates Transitional Relief Order NI 2015 and has no objection to policy implications of the proposed legislation at this stage. Agreed?
Agreed.
Okay, moving on to the next evidence session.
Just before moving off that, it's just in relation to 30 million, Chair, that's been set aside to deal with that convergence issue. If that's not all needed, what does that money go back to? It's over 4 years, isn't it? It's ring fence.
4 years.
For 4 years. 4 years.
The official will be here for the other bits.
Just maybe
we could ask Andrew then. Okay, members, moving on to banking issues, financial institutions and impacts on consumers, a briefing from the Consumer Council. I can refer members to pages 18 to 29 of your packs, and can I welcome Rachel Gray, Head of Money Affairs, and Cathy Graham, Director of Policy at the Consumer Council. You're both very welcome. Do you want to make some brief opening comments to the committee, and then we'll go to questions?
Yes, thank you very much. Thank you very much for having us here today. We really appreciate the opportunity to come and speak to you about this issue, which really we've been working on. Some brief background. Since about 2004, we've been working on banking issues with the super complaint that we did alongside the consumer group Which. So that was looking at some of the issues that there were regarding personal current account, the personal current account market, and the detriment that consumers in Northern Ireland were clearly suffering. Now, since then, there's definitely been an improvement and some positive changes made in terms of the reduction in charges and how information has been displayed. But the OFT reported in January 2013 on personal current accounts, and they clearly said that more work needed to be done and that banks needed to be working harder to rebuild confidence in the banking system. And since taking over from the OFT, the CMA have announced further plans to work on the personal current account industry, and we've been responding to their ongoing consultations, making sure that the Northern Ireland consumer has a voice in this. So we're currently awaiting some results of their most recent consultation, and we do hope that positive action will be taken. And in response to consumers' concerns, we have developed our own personal current account manifesto, which we use with the banking industry to try and get them to be making positive changes that will benefit consumers. But there are still detriments, and in the words of the CMA, these are causing major impediments to effective competition within the market and put Northern Ireland consumers at a disadvantage in terms of choice compared to their GB counterparts. So more needs to be done to ensure that consumers in Northern Ireland are getting a fairer deal, and also to help restore that trust in the banking system. Now, as you're all very aware, there have been significant numbers of bank closures within Northern Ireland, and by the end of February, 31% of high street branches will have closed. So we're at a real risk of Northern Ireland consumers being financially forgotten. And we're not by any means questioning the commercial decisions of the banking industry, but what we really would like to see is a strategic, coordinated approach so that future closures do not mean that there are pockets of Northern Ireland society that are the financially forgotten. We would like to seek support from this committee, really, or we would perhaps like to ask this committee if you could champion and perhaps get a round table of the main players, the banking industry, the FCA, other key stakeholders such as Post Office, Credit Union and business organisations, so that we can have this open discussion and perhaps seek to explore all of the issues, what the alternatives are, and try to find a tailor-made solution for Northern Ireland so that consumers are not forgotten. There does remain this lack of trust, and perhaps by the industry speaking to other key stakeholders, this could go some way to restore this trust while also providing these tailor-made solutions for Northern Ireland consumers. So that's really all I would like to say in the opening comments, and you do have the paper that we provided. So
thank you very much. Adrian, this is an issue that has exercised the committee for a number of years now, both urban and rural representatives in terms of bank closures. They've hit all of our constituencies. But even with that, I found it very interesting, the statistic that the branch usage is still high, with 68% stating they visit a branch once a month or more often. Could you tell us a bit more? I was surprised at how high that was.
We found that from research that we carried out in July, because whenever banks are announcing these closures, that they are telling us that they're changing their business model because more and more consumers are moving to online transactions. So whilst that may be the case, we don't have deep knowledge of what these transactions actually are. And lots of consumers may be confident enough to go on to an app on their phone and check their balance, maybe several times a day. But we don't actually know how many are confident enough to be using those apps for transfers, making payments. So we don't have enough knowledge to really dig down into what the types of transactions are on online or mobile banking. That 68%, they are using their branch at least once a month. And what we've found in recent research is that consumers place a great emphasis on the relationship that they may have with their local branch. That there are relationships there with the customer services staff. They can go in and speak about issues or problems and try to resolve some issues.
Just in relation to online banking, in our most recent round of research that was only carried out in November, 45% of those who used online banking said that they use it to check their transactions. What we really need is figures from the bank, if we can get them, as to what type of transactions are being done online. So while 45% said that they used it to check their balance or if transactions had gone through, it was only around 20% said that they were happy to use it to transfer money to other accounts or to other people, and only 6% would use it to actually speak to a bank representative online about a customer service issue. The statistics have been quite steady over the last number of years. There's been a slight increase in the online banking usage, and 52% of those that we surveyed said that they didn't use online banking. We delved into that a bit deeper and found that the issues weren't just, there is a lot of speculation that it's just the slightly older consumer that doesn't feel comfortable or doesn't know how to use online banking, but there are still quite a few concerns from the younger generation about security, and if they trust the banks to look after their money in that way. we did look at satisfaction ratings, and it was pleasing to see that the majority of consumers were satisfied with their bank, even when they didn't trust the banking industry as a whole. And I think that really reiterates the point that a personal relationship is very important to a lot of people whenever that they're carrying out their daily banking.
And do we have any figures at all on the usage of the post office now as an alternative?
Post office, do you mean, would that be in the wake of a bank branch closure?
Yeah.
The statistics, we don't have them to hand, but the amount of bank transactions being done through a post office is still relatively low. I mean, certainly we do have the remit now for postal services within the Consumer
It's just
Council.
I'm aware of a
so
number of services within rural areas. I'd just be interested to know how many people are actually comfortable using the post office compared to their branch.
We are actually, it's quite timely. At the moment we are undertaking consumer groups, and I actually had one last week, and there seems to be a general theme that consumers aren't aware that they can do, you know, these banking services online, and it depends very much on the post office. Under the Network Transformation Programme, a lot of the post offices are moving from standalone into retail units, in some cases pharmacies, you know, garages and things like that. So again, we have to question how many people are comfortable actually doing their banking in that setting when they don't have the privacy that they would have with the standalone branch. So it would be very interesting to get them statistics, particularly in areas where banks have closed, because post office is being seen as the solution to bank branch closures, and banking can be done at the post office. But again, there are discrepancies as to what services are available in some of the smaller post offices, and not all of the banks will allow a full range of services through the post office. Of the big four banks here, First Trust, for example, still don't have the facility for you to make a deposit into your account through the post office. So there's a question there over what services are available to maybe mainstream it across post offices. In some cases, there may be training required if a bank branch is closed. So there's another question there over what support the post office gets, perhaps from the financial institutions, when they are being seen as the solution to bank branch closures.
I think that that's key. There is a lack of consistency across post offices as to the type and extent of services regarding banking that they can offer, but also there's a lack of awareness within consumers that they can perhaps carry out some of these transactions at post offices, and then whenever they're maybe informed by a bank that's closing that the post office is a viable alternative, they will go to that post office perhaps with one expectation, and then they'll find out, oh well, I needed to bring a deposit slip with me, maybe they can't access the full range of services that they would in an actual bank branch. So the post offices, we believe, can be a viable alternative, and obviously we've got the post office access criteria, which means in a rural area there should be a post office within 3 miles of a rural population, and in urban areas it's 1 mile. So we've got that access criteria, which means that it is kind of a really good community service, but we need to make sure that post office is provided with the right support to be able to provide the full range of services. So there is some work to be done there.
John?
So, thank you. Thanks for the presentation. I suppose the biggest thing with banking, or my biggest gripe, is both as a consumer, round issues around interest rates. All banks seem to be charging, and we're sitting at the minute with a UK base rate of 0.5%. You go and try and get a personal loan, you will be charged somewhere close to 20%. Now I know there's this debate about Bank of England base rate and LIBOR's maybe slightly higher, but there is no justification on the wide earth as to how that interest rate should be 20% for a personal loan. Even if you were arguing that it's unsecured. Now, business loans are probably around 4.5 or 5%, but very often maybe secured. But I mean, in your experience of looking at that, has there been enough pressure? And the chair in his opening remarks and said, like, this has exercised the committee, and probably feeling at times quite powerless to do anything about it. But round that, is that not causing real hardship? And it's bound to be having an effect on the economy recovering, that people, you know, even simple things like changing a car, if people are having difficulty accessing finance.
Absolutely. It's something that needs to be looked at wider, and one of the things that we would call for with all types of lending, and whether that be even any type of credit that anybody would access, would be that there is competition within the market. We know within Northern Ireland we don't have as many. For example, with the banks, there's banks like Metro and Tesco don't offer their current account, just to use that as an example, in Northern Ireland. So consumers here and businesses as well wouldn't have the same level of competition and choice that we would have over in mainland UK. We do track interest rates, and they have stayed steady over a long period of time. Perhaps that's something, while we wouldn't specifically look at lending, there is a big risk, particularly with looking at consumers, if they can't access low interest rates, that they are pushed to higher cost forms of credit. We all know about payday lending. Even with the new rules coming in, that opens up another risk that other types of lending will come into the market. There's some talk about pawnbrokers are going to be the next payday lending and things like that. So certainly it does need looked at wider. As far as, I think that the main way to make sure that interest rates are suitable to the needs of consumers is that there is appropriate competition, which would drive lower interest rates, and that is probably a job for the regulator and for the Competition and Markets Authority to have a look and make sure that there are no significant barriers to entry in Northern Ireland that are restricting new lenders or new financial institutions from coming into the market.
I mean, I entirely accept the point, Chair, about a bit more competition in it. I wrote a piece in Agenda NI about almost it was a shame that we didn't have changes in around the Ulster Bank and the opportunities that might create, moving towards more looking at, say, a German style or European. But we do not have enough competition, and we are charging people too much. I mean, at the minute we at 20% as an average, and you can tell me if I'm wrong in that figure, but around an average for a personal loan, that is up at the same levels as a credit card. Right? There's not much difference. There's just no justification until we open up the banking sector to more competition and I have to say more scrutiny. And I get it from constituents both in personal terms and in business terms, as indeed I'm sure all colleagues do, that they've very quickly forgotten who bailed them out and who owns a significant chunk. I mean, we still own something like 63% of RBS Ulster Bank. And I say that I'm happy to register an interest as I'm a customer of theirs. But that's a difficult problem that I see, how we change that, how we start, and how the Department of Finance can start to either encourage, or what we need to do to encourage more entrance into the marketplace to get the competition that you've talked about.
I mean, perhaps as well as competition, the other thing we look at is choice, and there may be other options, options available in the local community. One viable alternative may be a credit union, and that would be both for personal banking but also for lending. We have recently piloted an affordable credit programme. We are on the steering group for that, and it will be evaluated at the end of March. So that was looking at borrowing. That would be to low-income consumers on payday lending. But I know some credit unions have looked at business banking, but again, our business loans, business credit. However, again, there are discrepancies over what is available in each local community, what's available through the credit unions. And our credit unions in Northern Ireland don't get the same financial support as they would do in the rest of the UK, despite the fact that 34% of consumers here have a credit union account compared to only 2% as a UK average.
Two things, if you don't mind, Sarah, would be one, why is that? How come we don't do that? I mean,
the Irish League of Credit Unions did brief the EDI committee and requested some funding to look at offering more services through the credit union. So it would be quite similar to the Credit Union Modernisation Fund that was available over in England and Wales. I know that there is a pilot underway. I don't know all the details. I think it's to be announced quite soon, where there has been some funding secured from the Department of Social Development to look at piloting 2 different types. Newry Credit Union is the only one at the moment that offers a current account, and they had also looked at mortgages. There are other possibilities there. Certainly if there were more bespoke options available for certain communities, it may, lessen the burden of, the interest rates and the cost of credit at the moment.
Well, Chair, I entirely accept your point, even about that keeping some of that personal relationship between customers and banks, because I think we have moved so far into the realms of almost, to use the phrase from Little Britain, if you've ever watched it, but computer says no. And we've got into that there is no relationship now between most people I meet now would have no contact hardly with any specific individual or manager, and that's certainly even more than saying personal account, but business accounts. That I think has been very detrimental.
Yes. The majority of financial institutions now use a credit scoring system. It would be across the board. Even going in to speak to the bank manager, it is, as you say, it's a credit score done on the computer. So there is a new bank come in from Sweden. I think they're over in the UK, called Handelsbanken, who are taking it back to the personal relationship with the manager, where the manager does get to make that decision. But I couldn't answer the question as such. The personal relationship is going. That has been ongoing for a while, the credit scoring system. So I imagine that has been tightened up quite significantly since the credit crunch, and there would be more proof of income required. However, from the bank's point of view, given that so many people were given credit and couldn't afford to pay it back,
that's right.
We have to see as well their point where they have to evaluate the risk in lending.
Yeah, I think we had it too loose at one point and we've swung it too far the other way, and the answer is probably somewhere in the middle. Thanks, Chair. Sorry.
Aidan? Thanks, Chair. Sort of my 2 questions have been covered about the post office and also the credit unions, but just on post offices, people were telling me that they find it very handy to get and use the post office to transfer money and stuff, and we're very pleased with it. So, sort of different feedback than maybe what you were getting as well.
That's great. And again, I think it depends on the different areas. The post office research that we are undertaking at the moment, there's quantitative and qualitative research, so we have been out doing focus groups, and in some areas they are very supportive, and I think but then in some they don't feel comfortable using the post office, or the post office don't have that facility available. So again, there is a need for consistency across the network.
Yeah, I think I don't know where it's the post office needs to get a message out, or the banks to say, you can do this transaction at the post office and it's safe and secure and all the rest of it. Maybe a bit of both.
Yes, and I think there is a need to have a look and see where the problem lies. It could be with training staff, and it could also be with promoting the service and letting people know that is available. So we have to question who should be providing that support. Should the post office, given that they're being seen as the solution to the bank branch closures, be given more support from the financial institutions to enable them to do that?
I think it's something we should be encouraging as well, especially in the rural areas. But also, as on to the credit unions then as well, I think why we have so high a percentage of people who use credit unions here is because of the trust factor. People just seem to trust the credit unions where they don't trust the banks anymore. I think, and it's not a bad thing. I think it's a good thing, because people do see it working in their own communities and how it does go. But I don't know how we encourage more people to do that, and how we, and the banks wouldn't want you to encourage that either, but because it's their competition.
Again, it probably comes down to more support for the credit unions. Credit unions, they will be different, depending on the community, on how many, their opening hours and
membership and all that.
Membership, exactly. Some areas of Northern Ireland have a much higher proportion of people who are members of a credit union. So I think it will be very interesting to see the outcome of the pilot. Hopefully it will be announced quite soon. I believe that's looking at making the service more accessible through opening hours, and maybe outreach services, so it's more accessible for people is one of the pilot, and the other one would be for them to offer credit unions. So hopefully that will be announced soon, and we'll be able to see how that goes.
Have you any, sorry Chair, I'll finish this point here. Have you any figures on how credit unions are based around the province, you know, on the membership factor on that as well?
We would be able to get it. We do work very closely with both the Irish League of Credit Unions and the Ulster Federation of Credit Unions. It's quite easy to map, and I think they are available in most communities. There are maybe only 1 or 2 towns in Northern Ireland that don't have
one or other.
That don't have one.
Or some places both.
Yeah.
That's okay, Chair. Thanks. Michaela?
Thank you, Chair. Thank you, ladies, for your presentation. Just on the post office research, and it's been touched on the rural areas. I mean, particularly in the rural area where I would come from in West Tyrone, we still have many issues around broadband, and indeed our post offices would have issues with the broadband and the connection. So that presents a problem for some of the rural areas. So I just wondered, did you encounter in your research, you know, was there research undertaken in the rural areas, and was that identified through the post offices? Also, the area that I come from, you know, in the likes of Plumbridge, Castledairg, we lost a number of our banks, and that only adds to the problems that exist with the rural post offices and the problems that they have. But was there any proposals or suggestions through yourselves in your research on the cost of living? Because I see in your research you do mention that customers are experiencing balancing incomes and outcomes, and that they can't afford to pay their bills at the end of the month, and indeed some struggle to pay bills at all. So I was just wondering, was there any research done around the cost of living and indeed the living wage, or is that something you are prepared to do or going to be looking at?
Okay. If I'll take the broadband point first. With post offices, the current strategy really is with the network transformation programme, it's about looking at alternative models to ensure that the post office is financially sustainable. So this is why we're getting a lot of movement of post offices into other retail units like supermarkets or garage forecourts and those sorts of things. And one of the strategies is also for post offices to provide a growing range of services, and it's thought that post offices can quite often serve as that digital bridge for a lot of consumers who aren't comfortable or confident or don't have access to online services. So that's a real issue if you have post offices which are situated in the heart of the community, but they themselves are unable to have broadband access. So it would be, excuse me, Ofcom, as the communications regulator, would be looking at that issue. But certainly it would, through our research and the network transformation programme work that we do, it would be something that we would be keeping an eye on, because as post offices evolve to provide these additional services, they need to be fully equipped. And in GB, post offices had a transformation fund attached to them, and it wasn't to the same extent in Northern Ireland. It's something that we've been working on, trying to encourage, which would help modernise post offices to be able to be fully equipped to do this. But if the network isn't already in those areas, there's very little that individual post offices. So it is that's some feedback that we can take back to our postal team. But it's worrying, it's concerning. The other issue regarding cost of living, we have recently embarked on a programme of consumer tracking research, which we do on a 6-month basis. We have just finalised a report on our second wave, and that will be distributed to all MLAs probably in about a week's time, and it'll be put on our website. Our last research found that 43% of consumers have ran out of money at least once within the past 2 years, which, that's almost half of us. This latest research has showed that consumers are still concerned about the same issues. So regarding kind of everyday living expenses. So kind of top of the bill was home energy costs, closely followed by rates dealing with large expenses like repair or replacement of maybe a white goods item, something like that.
Car insurance and things like that.
Things like, yeah. But also, what we found was slightly more, maybe around about 4% more consumers were given greater emphasis to the cost of groceries and also to the cost of running a car. Now, the fact that home energy costs is a huge proportion of people's income. But what we know about home energy costs, food and petrol and diesel, which is, a large component of running a car, all those prices have come down since the last time we carried out this research in July, but yet more people are worried about dealing with that as an expense. And people, whenever we've asked people then about do they feel better or worse off than they did 2 years ago, people who are saying that they felt worse off, the majority are saying it's because of increases in the price of food and increases in the price of home energy.
And maybe the cost of, or the issues around the living wage might have a factor in that.
And that's one of the assumptions that we're making, because wages have remained stagnant. Even though these other costs have come down, people are still feeling kind of this tight squeeze on the pound in their pocket, and they're still feeling the pressure on their household incomes. So we also think, there's a real perception there, and we believe that it's because a lot of these prices really shot up. Petrol and diesel, home energy and food, they all went up at a really high incline. And then, they've been gradually coming down, but the perception is, and it's probably a confidence issue as well, consumers maybe do see that certain prices are coming down, but they're not confident that they're down to stay.
And the cost of childcare is rising as well, which is another inhibiting factor.
Yeah. So, but that report will be released to you all, hopefully by the end of next week, if not, certainly early February.
So, thank you. Thank you, Chair.
Okay, Paul.
Thank you. Thank you for the report, but it's just in relation to, and appreciate that banks have tried to make it easier for people to switch, and the town that I would bank, and a lot of elderly people as well, have had to switch bank simply because one bank moves, and I think First Trust were the first to up stakes, and they went out. And as soon as they went, straight after them, the Bank of Ireland decided that they were closing. Some people had transferred to the Bank of Ireland on the basis that it was next door to the First Trust, and it was quite easy to make the switch because people had I remember people coming into the office and saying, well, there's quite simple, straightforward process now. It should be easy, and you shouldn't miss payments. All this will be done, and it did work because until the other bank decided it was going, and then people have decided. I'm just talking about elderly people in particular here. I was wondering about your study, how that worked out, because they don't necessarily have the confidence, nor do they have the access to the internet as well. Many of them don't want to even use the internet. There's a fear factor, and as a consequence, they want the face-to-face. Was there any particular way that you identified elderly groups or age concern and people such as that? Unfortunately, I find that a lot of pensioners who attend some of the, what I would call it, senior citizens forums and groups like that, they're maybe the ones who do use the internet, but there are an awful lot that don't go out and they're not involved. Had you any mechanism to actually engage with those people?
Yeah, I think that you're right. Those consumers that perhaps are members of different groups are ones that are more informed and certainly more confident. Now, the research that we would do, it would be would have a sample size so that it is representative of the Northern Ireland population as a whole, and certainly whenever we're doing focus groups we would try to make sure that we are accessing the demographics of the people that we need to identify, and perhaps those people that maybe are harder to reach, so that we do include and involve their views.
Yes, our most recent research in looking at those who didn't use online banking, there were less concerns from those aged 65 and over about security or difficulty in using it. The majority that didn't use it would be 32% because they didn't own a computer or they didn't own a smartphone, or just because they didn't know how to use it. So we know that is an issue. And when you're talking about when banks are leaving a town and switching to another account or to another bank, that has become a lot easier with the current account switching service. Over the last, it's been up and running now since September 2013. The switching levels do still seem to be quite low for Northern Ireland. However, you can see the benefits of, if somebody does still want access to a bank branch in their town, of switching. However, there are now about 9 areas that we have identified in Northern Ireland that are being left without a bank branch at all. And we are aware there will be more bank branch closures. We know there's a programme of them underway. So there are going to be numerous areas left without a branch at all. So we need a solution for the consumers and the businesses in that area who just don't have the bank and they don't have the option to switch to someone else. So this is where we are hoping to go with our research, would be to look at other alternatives and recommendations. Some of them, Ulster Bank are currently piloting the mobile banking service in Carryduff and Saintfield. Carryduff is one of the areas that has been left without a branch, but some of the other areas would be the support for the post office and making sure that them, services are available. So this is where we are asking for a much more wide strategic look at options for communities that will be left without a branch at all. Not only does that impact on those who are carrying out their banking, it has an impact on the community. We have spoken to business representatives and with our focus groups as well. Those who live in the town are travelling elsewhere to go to the bank, therefore they're maybe not using the local businesses. Local businesses have told us that they have seen a drop in footfall whenever a bank branch closes. But also there are implications on the businesses in that they can't securely lodge their money. They maybe have to travel with quite a significant sum to lodge that. So
that was going to bring me on to a point, because there is always the opportunity for those who are involved in criminality in our community to know that if there's not access to a bank, they know that people will tend to be maybe carrying, either not lodging their cash because of no mechanism of doing so on a daily basis. They might be doing it only once a week, where prior to that they might have been dropping in a night safe every night on the way home, or dealing with it on that basis. So there's the opportunity. Was there any consideration given to it in relation to community safety from that point of view? And I'm thinking about some elderly people, and I know it used to be quite the norm whenever people received their pay and they got it as a cheque or whatever. They took that and then they went to the bank and lifted all the money out that they needed to live on for the month or whatever that was, and they broke it into the wee piles that they needed. People are starting to go back to that idea because they don't have the access to the bank on it. I'm going to the shop, and as I'm going to the shops, I will call into the bank and I'll lift £50, as opposed to, and appreciate the hole in the wall is a great idea, but I've seen it being abused by some people who do not realise that how important that PIN number with their card is. And some elderly people are extremely trusting, and they'll say, Stan, I don't know how to use that machine, will you take that money out for me? And they hand somebody they have never met before who's standing beside them at a cash machine to take money out, and they give them their PIN number. I've actually seen it happening myself, so I'm saying, appreciate that is something that maybe is not necessarily getting through to a lot of the community.
Absolutely, and I can't answer whether this is something that the banks have looked at in relation to community safety. There is no one bank that we can call upon, whether they be the last in the town. The majority of the towns have lost 2, 3, 4 banks. But while we are looking specifically at financial inclusion and making sure that consumers have access to financial services that are appropriate to meet their needs. There is a need to look at all the other issues associated with that, and that's a very good point, that there are risks there, you know, with regards to community safety.
Judith?
Thanks. Thank you for your presentation this morning. Quite a lot of the points have already been taken. People having 27 questions and that. Not looking at any in particular, John. Just touching on the financial capability side of things, we've obviously welfare reform is going to be progressing here in Northern Ireland as well, and even though we have hopefully got a few sort of concessions around split payments between people and that, there's still going to be a difference in how people's benefits are paid to them, and people are going to be expected to budget an awful lot better. And I'm just wondering, has any work been done to look at the impact of welfare reform sort of over in England and that, and whether or not there's any specific services that the banks are there's more demand for, the more different types of service sort of as a result of that. And I'm wondering, Chair, whether or not, you know, this is something that we should be looking at with the DSD committee, you know, to try and see if we can then encourage our banks to sort of prepare in advance as one way of sort of, you know, mitigating the impacts.
In relation to financial inclusion, looking at those who have a transactional bank account, the Family Resources Survey says that 10% of people in Northern Ireland still don't have a transactional bank account. I think it's only 4%. The rest of them, there's quite a high percentage, will use a post office current account, and that is how a lot of people in Northern Ireland get their benefits paid to them. So there are a lot of things to consider with welfare reform, and I think the likes of NICFA would be very good to speak to. They did do a report on the impact of welfare reform, and I think it was a couple of years ago. So given the changes, that may have also made the actual findings from the report change somewhat. There was an announcement that the government have worked with a lot of banks to make sure that basic bank accounts are available. I don't know the situation in Northern Ireland, but I know over in Great Britain that those who are receiving universal credit have to have a bank account rather than it cannot be paid into a post office current account. Therefore, Northern Ireland, having the largest percentage in the UK out of all the regions of those who are unbanked, are going to have the double whammy of having the payments change maybe from weekly to fortnightly or monthly, as well as having to change their banking habits entirely. So I do agree that needs to be looked into, and I would suggest perhaps speaking to NICFA, but without knowing the full details as yet of what the situation is going to be in Northern Ireland, it's quite difficult to tell. But in considering the financial capability aspect of that, it's if you get paid monthly and somebody all of a sudden said, right, you're going to be paid every 4 months, this is for those who are currently getting paid weekly, changing to a monthly situation is going to have some impact on them, both with budgeting and as well within that period of time, because they will have to wait perhaps 4 weeks or a month to get the full payment. I know they've talked about getting a discretionary upfront payment, but then that will be deducted from other benefits. So there are a lot of issues to consider there, and I think there are probably some other organisations who deal with welfare and benefits that would be better placed to answer questions specific to welfare reform. But from our point of view, the financial capability aspects are something that we are well aware of, but with the banking, certainly it's something that we'll need to keep an eye on.
Can we agree then to look at that as a committee or to approach the DSD committee just to see exactly what they are doing, or it may be that it's an amendment to the welfare reform bill, about where benefits can be paid into. It may be something that there isn't a cost to, and is therefore something that we can do, and another thing that we could do differently here.
Members content to correspond with the DSD committee in regard to that?
Nice to see the bill, though, Chair, first.
Chair, maybe I'd certainly agree with Judith and Risha. I think the one thing that maybe we should also ask the DSD committee, they may or may not, I don't know whether they've raised that at all with the Minister, whether there's been any discussion with the department. It might be something the department has in mind already on that, but I think if we liaise with them, we look at that issue.
They'll say they have anyway, just so that it's not my idea.
Okay, members agreed. Deputy Chair.
Thank you. Morning. You mentioned in your paper the closures of bank branches throughout Northern Ireland, and we've had some recently there just before Christmas, and obviously that places a greater dependence on the post office. And to my mind, the post office is quite vulnerable insofar as it depends quite a large extent on government contracts like the POCA and so on. And we've had the case there recently where the housing executive contract with the post office, the terms of that were changed. I think they were asked to provide a location for payment at the request of the housing executive. So obviously a post office cannot open a new post office to suit the whims of the housing executive. So that's the sort of vulnerability there is to the post office itself. And I think probably there is a lot more that we could do through the political institutions to support the post office and ensure that its viability, because, you know, as you point out, rural populations in particular are becoming more and more dependent on the post office. So I was just wondering, do you have any experience of that side of things?
Yeah, we have the statutory remit for postal services in Northern Ireland representing consumers. So we're involved in the whole network transformation programme, and certainly we would be supporting post offices in becoming financially viable. And it is this idea about, as well, you know, it's about supporting the post offices in the range of services that they're able to provide, ensuring that they have the facilities to be able to provide those services. So, for instance, in areas where there is poor broadband or perhaps consumers choose not to use online services, the post office can provide that digital divide service. You know, we're looking at options where post offices perhaps have a private room or a private office where they can either speak with members of the community privately, or they can perhaps use these services, you know, lend them out to other services like the perhaps mobile banking for one of the banks that have chosen to withdraw from the high street, or perhaps joining sources with a credit union, so that the credit union can provide a satellite office so many days per week within that location. Yeah. So we do think that there is great opportunity there for the post office to enhance the services or provide a broader range of services, but they do need support to be able to do that. And I think that ties in again with the issue that where a bank or where banks make the decision to close high street branches, they have to be looking at what they're leaving behind. What is their legacy? You know, can they offer up perhaps the building that the branch had occupied at a nominal rent? Will they ensure that they keep their ATM in place? Will they provide funding to train up post office staff to then provide the range or a range of services that they are no longer going to provide in that physical location? So I think again it comes down to having a coordinated strategic approach, but we need a champion to call to task all these people, to invite people into the same room, members of the banking industry, the FCA, post office, credit union, other key stakeholders and business representative organisations, so that we can come together to work out, well, what are viable alternatives, how could these work, and how can we provide tailor-made solutions for Northern Ireland. And that's something that the Consumer Council would be very keen to work on with this committee, if the committee thought it was viable to do.
Thank you. And Chair, I would propose that we add to, due to this proposal request for the DSD committee to get an update from the Housing Executive on the situation regarding the Post Office and the Housing Executive contract.
Okay, members can
Chairman, I already wrote to DSD about that there and got a reply back. I could pass it on to Shane and he could circulate it.
Okay.
I wrote also, but I haven't received any reply
I
back.
emailed yesterday, got an email back from him yesterday just.
Right. Hopefully it was favourable.
No, it's not. Don't build your hopes up.
Okay, Leslie?
Thanks, Chair. Yes, interesting report. Some things appear contradictory, though. But if you look, for example, at the Payments Council, the switching programme, which I notice I get now with my bank statement every time it comes in, I think they want maybe rid of me. 50% said they felt it was too much hassle, and 39% said there was no point, as banks were much the same. So 89% really. It's inertia you've got. Big problem is inertia. The other point that stood out at me, Cathy, you mentioned there the digital bridge that the Post Office can provide. Obviously, that could work its way into increasing the number of people who would go online, and therefore would act against, using the Post Office in the sense that you'd have more branch closures, more people go online.
Possibly. I think that, again, until we actually get the figures from the banks themselves as to the numbers and types of transactions that consumers are currently doing online, it's quite difficult to determine. I think for us a key factor is that there always needs to be consumer choice. Some people will always choose for security reasons or convenience or personal relationship to be visiting a physical branch. Others, for convenience, time factors, will choose to do the majority of their transactions online. But I think that by the key stakeholders being able to work together by agreeing a vision for the future and having, being able to input consumer research as to sort of the behaviours of consumers around their banking. I think that's probably how we could come to a common vision that will work for consumers and business consumers as well.
If you look again at another piece of your report, if you look at the first quarter of 2014, you see that 1,144 switched to a Northern Ireland bank and 4,407 switched away.
Yes.
That would suggest it's happening now.
It is, but I think that what the important factor about that statistic is looking at what are our kind of homegrown Northern Ireland banks offering. We've got such a migration away from those big four banks. And what the Which report has shown in kind of their research about customer satisfaction and what those banks are offering, there are so many banks out there that are offering much better deals for consumers than the banks in Northern Ireland.
But you mentioned there, for example, in Northern Ireland, that the biggest gainers are Halifax, Santander and Nationwide.
Yes.
So that looks again like that's working.
It does. Unfortunately, what we can't tell from that is who is switching. We don't know if that is the older community, or we don't have the demographics to know if it is people who have lost a bank branch in their area and they're switching to a more convenient one. The figures are quite pleasing. However, over the last number of years, switching levels haven't really increased that much since the current account switching came into play.
But it looks like it's changing now. I mean, this is the start of the first quarter in 2014.
That is the first time the Payments Council have been able to provide us with regional statistics.
Probably better now then.
We won't know until we see next quarter. All we can tell you are that for the UK switching levels over the last number of years, they have stayed pretty much the same. So we have been calling on the Payments Council for the last year and a half to provide a regional breakdown, and that's the first time we've been able to get it. So it's certainly something that we will monitor going forward.
You did highlight a point that caught my eye as well on the financial capability strategy that DETI produced in 2013. And it's apparently chaired still with the executive. Not unusual, perhaps. But that's something we should follow up anyway, but matter of interest. Okay. The other thing is, Cathy, you mentioned there about the costs, the fact that fuel costs are coming down, and that's still, despite that, people still have difficulties. I was looking at electricity bill last week and I see that VAT on is now 20%. Is that not surely a significant factor moving from 5 to 20?
I know that on home heating oil, VAT is it's around about 5%. I would need to go and have a look at that. Get our guys in the office to have a look at that. I thought you'd be on top of that one because there are supplements in there again, green supplements. Yes.
But from 5% to 15 to 20%, 15% increase on your electricity bill is quite significant.
It is. Yes.
Thanks. Okay. Thank you.
Does the Consumer Council have any recommendations for banks in terms of IT difficulties? I mean, there is some reference to it within the report, but how can banks improve their IT systems? I mean, the Ulster Bank RBS situation obviously has been well rehearsed, and the difficulties in Scotland there. As a Consumer Council, any specific actions the bank should take out in regard to that?
We've been in correspondence with the Financial Conduct Authority. We haven't had full sight of their report or their investigation, which has been a cause of frustration to us. It has been well rehearsed that consumers in Northern Ireland were experiencing difficulties many weeks, months after the problems regarding RBS as a whole were resolved, and consumers in Northern Ireland still experience intermittent problems with IT issues. But we have been working with the banks and passing on consumer concerns to them and seeking assurances from them.
Yes, we do monitor and we keep a log of any IT issues that do arise, and it's important to note that it's not just Ulster Bank, it's across all the banks, whether they be solely Northern Ireland or they are UK-wide. In our most recent survey, we did ask what issues consumers had experienced in the last 12 months with their bank. We were pleased to see that 78% hadn't experienced any issues. Some of the main findings would be that Ulster Bank customers, they did experience more problems with ATMs, with withdrawn money, and also with online banking glitches. However, in recording it, they do seem to be quite small. It might be that the online systems are down for a couple of hours as part of our ongoing work in working with banks and ensuring that consumers' needs are met, whether that be online banking or telephone or face-to-face banking. It is certainly that any problems are communicated to customers straight away and that there are alternatives for them. So it's not the core of our work, but it's certainly something that is on our radar. We do continue to monitor. However, we are pleased that the FCA have finally made an announcement about the Ulster Bank fine, and hopefully a lot of lessons will be learned from that, and that infrastructures within all the banks will be improved to prevent significant problems like that arising again in the future.
I mean, 19% of those surveyed say they do not use online banking due to security concerns. Quite a high figure. But just out of interest, I mean, is there many examples of fraud or where people have had their online accounts broken into, hacked into, and money taken out, or is that virtually non-existent in terms of systems we have in place?
It's not something that we would take complaints from customers on. Action Fraud would be a very good company to speak to, or good organisation. I mean, certainly I know that the PSNI may have some interest in that, but I think Action Fraud, certainly I'm happy to go away and have a look into that. As I say, it's not something that we would monitor. We do hear occasionally of cases where that does happen, where I imagine a lot of fraud does happen. Are those
hacking cases, or is it a case that somebody's stolen?
Different scenarios. ATMs are still quite a big concern, which Paul had raised, where with the cards, devices being placed on an ATM where the cards can be duplicated and used, which is one element of fraud. I would say that is still probably one of the main types of fraud. Banks do appear to have very good security with their online systems. There's very few cases that I have come across where someone's online account details have been hacked or duplicated and used. But I will go away and have a look into that to see if we can get some idea of the instances of that, and if there are any things that could be improved to reduce consumers' concerns over online security.
Whilst we wouldn't collect the figures regarding fraudulent activity, we do have a remit for consumer education, and just before Christmas we had our online Christmas campaign, and quite a strong key message there was about safer ways to pay. So what we try to do is enhance consumers' confidence and capability when shopping online, making sure that they look for, there should be a logo, if you're shopping online there should be a logo on the screen, a little padlock which makes you confident that that is a site where you can process a safe payment. So so we do try to make sure that we're getting messages of consumer education out there so that consumers are safer when they're shopping online or making transactions online.
Okay, thank you. Okay, members, any further questions? No? Okay, thank you both very much.
Thank you.
Members, there's a couple of issues arising from that. I seek agreement that given the cross-cut nature of this issue, to copy the ETA committee, suggesting that it may wish to seek an update on issues raised relevant to its remit, and perhaps seek from the ETA committee more information on the financial capability strategy that Leslie referred to. And also, if members are agreed, that we seek to set up a round table involving relevant committees and the parties referred to by the witnesses, and get the clerk and the team to look into that for next week. Great. Can I also advise members of Westminster NI Affairs Committee report into banking structure here is expected before dissolution in March, possibly sometime in February. Members may wish to await this report along with Consumer Council's further research into the impact of bank branch closures before deciding what potential follow-up role this committee might play in regard to that. Moving on then, the legislation that we had started previous to the evidence session there. Paul, you had a question for the witnesses. And can I welcome Brian and Andrew back to the committee?
My question was just in relation to the £30 million set aside to deal with transition between convergence issues between councils. Appreciate that not all of it probably will be used in the first number of years, but it's over a number of years. Looking at what is outworking, a number of councils are probably not going to need a big lot of intervention. Does it look like we've overestimated in this, or and if we have, what will happen with that money? Does it go back in?
That's a very good question. The executive has agreed up to 30 million. We're probably on the safe side of that 30 million, I would say. But we're modelling a scheme that is going to provide assistance to 350,000 ratepayers, maybe. So we're still working on the estimates, but we are certainly on the safe side of 30 million. The reason I'm being a bit cagey about this is because we are under a legislative obligation to undertake a mid-year review into the effectiveness of the scheme. So if there are to be any savings in the initial years of that, those will have to be banked in terms of the mid-year review or the mid-term review that we are required to make in terms of the effectiveness of the scheme. So there may well be some recycling at a mid-term point in the 4-year life of this scheme, in terms of if there are areas where it is not proving to be effective, we can recycle that.
That's fine.
Okay, members, moving on. The rates, regional rates order NI 2014, pages 47 to 50. Purpose is to set the amount of domestic and non-domestic regional rates for year ending 31st March 16. Order will stipulate the regional rate for domestic and non-domestic property expressed in terms of pence per pound that will apply for the 15-16 rating year, and the poundage is laid out in the proposed rule will reflect the executive's budget both domestic and non-domestic properties, and they'll be subject to affirmative resolution. The members have any queries on this one? Happy enough? Okay, members content put the question. The committee has considered DAP's proposal for subordinate legislation to the Regional Rates Order NI 2014 and has no objection to the policy applications of proposed legislation at this stage. Agreed?
Agreed.
Rates Owner Allowances Order NI 2015, page 51 through to 60. Purpose is to increase the allowance or discount the Department provides to landlords who are subject to compulsory provisions under Article 20. It also reduces the maximum allowance or discount provided for by a rates payment agreement between the Department and landlords under Article 21. These will apply from 1st of April of this year and comes as a result of a consultation exercise conducted by the Department last year. Consultees were written to in November 2013 in respect of the changes. The rule will be subject to affirmative resolution. Any queries on this? Okay, members content put the question. The committee has considered DFP's proposal for subordinate legislation under the Rates Owner Allowances Order NI 2015 and has no objection to the policy implications of the proposed legislation at this stage. Agreed?
Agreed.
Appreciate, Chair, and we've agreed that. I know that some probably within LPS, concerned about the issue about who collects rates, and some landlords decide that they want to charge the rates, and as such they will avail of this. This has thrown up many anomalies over the last number of years where we've had cases where people have been paying rates to a landlord. Landlord has never passed the rates on to the LPS. As a consequence, whenever, and I'm thinking of one particular where the landlord actually went bankrupt, the rates liability then fell upon the tenant who had within their lease already paid them. But because the rules include that if you're occupier, you're the person who owns it, or still owes the money even though you believe you've paid it, there's no accommodation for that. Is there any mechanism within this to ensure that rates make it more streamlined, a bit like a SORN, whenever you sell a car that you pass it on, that's all of that's passed on automatically to the rates office? That's one aspect, and dealing with it from the point of view of who becomes liable and ensuring that landlords who want to avail of this reduction are making sure that they pay it and don't end up with their tenant ending up with a big bill. Is there any mechanism to ensure that?
Well, what we've done is taken a couple of steps to simplify things. We've unified the allowance for a start, but we've also removed the tenancy requirements so that it is clear that there's a statutory requirement on landlords to pay the rates if the capital value is £150,000 assessed value or less. Yeah. Above that, it will be a matter for the tenant unless the landlord decides to have a voluntary agreement with Land and Property Services. I know I've given evidence to this committee on a couple of occasions on this issue, and you've also taken evidence from those that have fallen on the wrong side of that policy.
Yeah.
And I wouldn't agree that there's many cases like that, but there are a few cases, and I think our Minister wants us to have a fundamental look at the whole issue of landlord liability.
Will there be
this year?
That's good.
But in terms of the short term, we've taken two steps to simplify things. We've kept the allowance, we've standardised the allowance right across the board for all sectors, and secondly, we've removed the tenancy stipulation, which was another complicating factor in terms of people's understanding as to how it operates. But we're not content with that. I think the Minister wants us to have a fundamental look at the whole issue of landlord liability this year, and that's what we're going to be doing. I don't know whether Andrew wants to add anything to that.
No, I mean, that's just what I was going to say. In the scenario what you're talking about there, it's likely to have been a property where the value is over £150,000 and the landlord hasn't signed up to an agreement, and therefore the occupier has fallen liable under the statute. So that exact scenario is relatively discrete amount of cases. So, but we appreciate that where it arises, it's very hard.
It does happen, not just in residential, it happens in commercial as well. And probably more so in commercial, because I think commercial landlords tend to be the ones who say, well, we'll charge you rent and rates. And maybe the lease might well state that on it. But whenever that commercial aspect and the guy goes bankrupt that owns the property that the business is in, the business still is operating, but ends up finding that their landlord has not passed on 2 years rates because he was in a cash flow position, difficulty, and he was just using their money to live on.
You're right. I mean, the commercial sector is more complicated because of the lease arrangements and things.
So it needs
but having said that, the overwhelming majority of repairs in the non-domestic sector would be the occupier.
Yeah.
It's very rare for a landlord to be paying the rates.
Yeah, Keelan?
No, it's just on that, and to support Paul on that issue. I mean, Brian, you know, there was an individual who wrote to us in committee, and you did deal with that. And I think it is important to stress that, you know, whilst there is a discrete amount of people that falls foul of that, that it could be something, you know, maybe that could, I suppose, quantify itself maybe and going forward. So I think it's very important that it's that the reforms need to change around that. And when is there a time frame for that? I know you said the ministers want.
Well, the minister wants us to look at this year. So, and that's what we're going to do. I mean, at the moment we're contending with rates convergence, revaluation, changes to rate rebate, but it's on my job plan for this year is to look at. The minister wants us to start to look at it. We've done those two things. We certainly don't think that's solving the issue. In the case that you mentioned, there's a fortunate ending for that. The landlord, I think, eventually paid the rates.
You did.
Thankfully. And in other cases, LPS have cut the individual some slack, and the cases have resolved themselves. But clearly something's not quite right here, and I think we accept that. And the minister's asked us to have a fundamental look, so that's what we will do, and we'll come back to the committee on that.
Okay. Members, moving on to valuation for rating DCAP rate regulations 2015, pages 61 to 71. Purpose is to prescribe a new DCAP rate for non-domestic properties as part of the 2015 rating revaluation. All non-domestic properties are valued for rates by reference to an estimate of rental value, but as some of these properties are rarely rented, it is necessary to value them with reference to construction costs. The DCAP rate is a conversion factor needed to derive an annual equivalent or rental value from the depreciated construction cost estimate. This is subject to negative resolution. Do members have any queries?
Could I just ask, Brian, I mean, how realistic is this exercise now? You're talking about construction costs, for example. You can obviously use modern, or relatively modern cost, but if your building was built, say, 100 years ago, how relevant is that?
Well, it's an alternative method of valuation. We don't prescribe, apart from the decapitalisation, we don't tell LPS which way to value things, but sometimes they have to resort to other ways rather than direct market evidence. So if you're trying to value a police station or something like that, you've got to look, and this is only for the specialised properties, and also airports. Airports don't rent, you know, so they have to resort to other methods of valuing them. And this has been something that has been used as a kind of surrogate method of valuation for, I'm sure, about 150 years. They deal with older buildings by then having allowances for depreciation. So there'd be there'd be obsolescence allowances then made. So you'd get how much does it cost to construct a replacement building, and then there would be deductions from that to take into account the actual building and the degree of obsolescence associated with that. And then there's a land value, and then you get a total capital value for non-domestic, and then the decapitalisation rate is applied, which gives you the annual rental figure.
So that formula is the same for any of those sort of buildings?
For any of those. They represent about 17% of the valuation list. There's, you know, they're mostly public sector. All schools and all hospitals in Northern Ireland are valued by this method. But and all police stations, all airports, and things like oil refineries, which we don't really have, but there are some significant private sector, but they're mostly public sector. And we made the decision to reduce the decapitalisation rate because A, we didn't think it worked effectively because rental growth since 2001 hasn't been that significant, whereas cost inflation has been huge. So that's why we've reduced it.
That's what I was thinking.
And one of the outcomes of this is that it has moderated the impact on the public sector. If we had kept the decapitalisation rate as it currently stands at 5.5%, the rate liability on the Department of Education, rate liability on DHSS, PS would have increased significantly. So there was a useful outcome for that. But the main reason was that cost inflation since 2001 had been running at 38%, whereas you know from evidence given by Land and Property Services, the general office market and shop market's down, office market is pretty flat, factories are pretty flat. So it didn't work in that context, and that's why we put forward the policy to reduce it and consulted on that, and then it was decided to take it down to 4%.
Thanks, that's fine.
Okay, members content with the question. The committee has considered DAP's proposal for subordinate legislation under the valuation for rating decapitalisation rate regs NI 2015 and has no objection to the policy applications of proposed legislation at this stage. Agreed?
Agreed.
Okay, Andrew, Brian, thank you both very much again.
Thank you very much.
Okay, members, SL1, the Public Service, Civil Servants and Others Pensions Consequential and Amendment Regs 2015. Purpose is to modify the effect of other statutory provisions and their application to the Civil Service Pension Scheme. These amendments are necessary to ensure that the new Alpha pension scheme operates as intended within the wider framework of pensions and tax legislation. DFP officials were advised of these changes at the end of September by the Treasury. Given both the nature of these modifications and the tight timelines involved, the Department agreed with the Civil Service trade unions to run a shortened 4-week consultation from November to December, and given the beneficial nature of the amendments, the trade unions have indicated they did not consider it necessary to respond to the consultation. This rule will be subject to affirmative resolution. Do members have any queries on the proposals? No. If there's no queries, put the question. The committee has considered DFP's proposal for subordinate legislation under the Public Service, Civil Servants and Others Pensions Consequential and Amendment Regs NI 2015 and has no objection to the policy implications of proposed legislation at this stage. Agreed?
Agreed.
Marriage Amendment Regs, page 76 to 81. The SR has been laid in the Business Office and is subject to negative resolution. At the meeting on the 3rd of December, the committee was briefed by officials on the initial proposal for subordinate legislation and members were content. Departments confirmed there has been no changes to overall policy since the initial proposals were given to the committee. The Examiner Statutory Rules report is page 33 through to 40 and he has no points to raise. Members are content. I'll put the question. The committee has considered SR 296/2014, the Marriage Amendment Regs NI 2014 and has no objection to the rule. Agreed?
Agreed.
Civil Partnership Amendment Regs, pages 82 to 86, has been laid in the Business Office and is subject to negative resolution. Again, it was raised on the 3rd of December at our meeting. Members were content with the proposal at that stage and there's been no changes since. Also no issues from the Examiner Statutory Rules. Members content with the question. The committee has considered SR 297/2014, the Civil Partnership Amendment Regs NI 2014 and has no objection to the rule. Agreed?
Agreed.
Committee Work Programme, pages 42 to 47. Members content to proceed on the basis as proposed.
Agreed.
Agreed. Any other business? No. Next meeting will be next Wednesday at 10 AM.
Okay.